We got the 12 months of inflation declines. We got the higher only if inflation goes higher. This was a lot of the could talk that we got from Jay Powell. We got the restrictive for 6 months. We got expectations are anchored. We got positive real rates. We got jobs getting into balance, but I had that written as imbalance. Supply is getting into balance. We did not hear anything about banking. No Greenspan, no Volcker. Didn't warn about loosening prematurely. Oh, we got that. That's great. That's actually great. Let me double check that because we have the transcript here. And I just want to see the word premature really quickly because maybe did he mention that? Because if he didn't mention that, he didn't mention that. Oh, that's really good.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.
The word prematurely was not used. That's a big deal. I actually like that a lot. Okay, good. So let's add that to the bingo card that he didn't mention. Warning against prematurely loosening. He did not invoke Paul Volcker, didn't invoke Greenspan, didn't invoke fate, didn't tell us about unemployment potentially being, what level would be unacceptable to them. We didn't get that. So there's some things we didn't really get here. This, I would probably give us this too early to call peak, but maybe they're very dependent on the data here. So this is kind of my bingo card. You can compare it to what you did, but let me give sort of an overall view here. I would say this was a very neutral Powell. He didn't really, he certainly didn't pummel us like last year, right? Last year was a complete pummeling because he's like, we're not even restrictive yet. We got a long freaking way to go. This time he's telling us, look, we're getting there, but things could break. And that's really important, this idea that things could break. In fact, he specifically emphasized the word could multiple times, actually. So that was sort of his way of conditioning, I think, markets to say, look, we have no idea. When he emphasized could a couple of times. Take a look at where those are, and I'll show you where he says we have no idea. We expect this labor market rebalancing to continue. Evidence that this tightness in the labor market is no longer easing could call for a monetary response. We don't have that evidence that it's not easing, but it could happen. So that could was a really important one. Here was another one. Additional evidence of persistently above trend growth could put further progress on inflation risk and could warrant further tightening, but not necessarily. Look at the double conditional here. He's basically saying, look, just because we have above trend growth only matters if it affects inflation. Actually, if you go back to the bingo card, on the bingo card, I think we actually had exactly that. Let me see where that was. There. It's that one. Oh, hold on. It's black. That one. The bottom left corner. Demand above trend may be acceptable as long as inflation doesn't, unanchor, right? So I'm actually going to put a check in that. He didn't exactly say that, but that double condition, in my opinion, is exactly what he meant. So as a Fed watcher, that's a check mark for me. I'm going to go back to the sheet now. Let's keep looking at what he said with could. So that double conditional right there, that's saying we might be okay with above trend growth. Look, if the economy's booming and inflation's down, we're not here to say that can't happen. Equivalent rents. Okay, well, that talks about, that wasn't an important could. That's why I didn't highlight it. Okay, talked about that. That's the labor market rebalancing. Okay, here. Doing too little could allow inflation to become entrenched, right? This entrenching, this has to do with expectations and ultimately, could require monetary policy to be higher, basically. Okay, fine. So a lot of conditionals here, right? But notice this is a very different tone. This isn't a Jay Powell that's telling us we will go higher. He's saying, look, if crap comes in bad, we could do more. In fact, We did just get the University of Michigan sentiment data. We got sentiment that actually declined a little bit to 69.5. The expectation was 71.2. 1-year inflation expectations actually ticked up a bit, 3.3 to 3.5, not great. And the 5 to 10 year ticked up a tiny bit from 2.9 to 3.0, both on expectations and what we were before. The 10-year Treasury hasn't basically moved at all. It's basically flat. Markets are still, they're still positive, which is nice, but a little uncertain because people are trying to digest this Fed talk here. And this was not victory. We did not expect a victory speech. We expected this sort of conditional optimism, and that's what we got. Now, I want to show you this one line that he says because it's pretty remarkable. So buckle up for this one line that he says. Quick shout out, though, obviously, if you want to support the channel, you want to invest in House Hack, make sure you're a course member. Sign up for the courses linked down below. Last time we raised money, 80%, think about this, of the $27 million House Hack raised, over 80% of the investors were course members. So consider that for a moment. And that's accredited investors. So we are expecting to basically just have the offering be for course members only. So if you want to be in it, check it out. Check out the courses linked down below. But okay, listen to this line right here that we got from J Powell. You ready for this? Conclusion. I loved this line. Okay, this was hilarious. As is often the case, we are navigating by the stars under cloudy skies. Okay, that's impossible. You can't navigate by the stars when you can't see the stars. He's literally saying, look, I was on the schedule to give this speech. I have absolutely no idea what the HE double hockey sticks is going to happen. Things right now seem like they're okay, but there are some risks. I thought this was interesting. It actually started bearish. He started bearish, and I wrote WTF on it when he said this because there was this one part that was bearish. Remember, my goal is not to just feed you one narrative. I always want to give you the good and the bad. I really try my best with that, whether it's politics or whatever. Look at this right here. I literally wrote, what the F? So he's like, hey, on a 12-month basis, core PCE inflation peaked and has gradually declined, basically all the way through July. And then he says, lower core inflation readings in June and July were welcome, but that's only 2 months of good data. And I'm like, bro, what are you smoking? It's been like a year of good data. So I thought this was a way of him kind of like trying to inject that balance, right? I kind of think he had to put some bad in with some good so that it's not all good because he's trying to signal, hey, it could go either way. And we have no idea. That's basically what he said here. But again, this is a world of a difference from last year. Remember what we heard last year. Last year, we literally heard him say, the historical record warns against premature loosening. He did not say that. We have to force demand and supply into balance. Didn't say that this time. He actually said, hey, if demand essentially is continuing to go up, we could raise rates if inflation unanchors. In other words, if inflation doesn't unanchor, it could be okay that demand goes up. That's impressive. The labor market is clearly strong, devolved. It devolved into, well, the labor market is definitely coming into more balance, but there's still some work to do. And that could change, but it's trending in the right direction. Last year, he said we need to be restrictive for some time. This year, he's like, we've been restrictive for some time. Well-anchored inflation expectations. Of course, that's almost a default check mark. No Volcker mentions this time. And he didn't, there was one thing he mentioned last year, which was rational inattention. So last year, the talk, rational, oopsies. I'm trying to, those are my notes. Hold on. What did I do wrong here? That button. Okay, there we go. Okay. What was I going to say? Okay. Rational inattention is basically inflation is if inflation is stable, people don't care about inflation. Like businesses and people don't plan for inflation when inflation is stable. So they're not really worried about it. When inflation is unstable, that's when people are freaked out by inflation. And then they start pricing in more inflation, and they're worried about more inflation. So a bottom line out of all of this, to me, bottom line out of the whole kit and caboodle here is this was a cautious Fed. He does not want to create a stock market rally, but he's not trying to create a stock market crash. Last year, he's like, bend over. So this is nowhere close to victory. It is a neutral Powell. And I want to see how the rate market is pricing in expectations. We were like at a 10% chance of a hike in the next one. And let's see where we sit now. So we are sitting at a 20% chance of a hike, but that's been stable for basically this week. Last week, we were at 10%. If we look at the 5-year forward break even, it's again trending down. It's sitting at 2.35. The 5-year break even is sitting at 2.26. And yeah, that's looking good. So I'd call it stable. And as far as what Wall Street is saying, the upcoming meetings, we're in a position to proceed carefully. This is just basically a way of saying, hey, like we might end up pausing. We're not going to look for our star. We really have no idea where that is. So we're going to look for the incoming data. No fireworks at Jackson Hole expected by the options market. And that's what we got. No fireworks. We got a neutral Fed. Fed didn't splash any cold water or hot water on anyone. Very neutral. Just reading what the suits are thinking. Yeah, I mean, roughly the same thing that we summarized here. So I would say this is kind of a no news is good news approach. I'm satisfied with this. No news is good news is a way of saying, hey, we didn't get reamed by him today. So this is where you kind of go, oh, okay, dodged a potential bullet. That's it. All right. Thank you so much for being here. Check out those courses on building your wealth linked down below. Oh, wait. Is there a new Nick T piece? Hold on. There's a Nick T. Let's see what Nick T has to say really quick. I imagine it's going to be relatively similar, but let's see what he has. Jay Powell's word of the day, carefully. It was a risk management speech. Okay, well, that's the same thing that I said. Are you watching my video? Okay, it's not the same thing I said. I know. As expected, Powell rejects the idea that inflation target would change. Well, duh. That's nonsense. That doesn't matter. Risk management speech. Fed chair notes economy hasn't cooled as expected. That's demand coming down, right? And says signs of strength could warrant more action. Right. Could, not will. Very important. Nick T literally put the word could in the byline of his article because we agree. That was very, very important. Let's see here. Yeah, Nick T also picked up on the 2 months of good data are only the beginning. I thought that was weird. That was the what the F that I wrote down, right? So we picked up on the same thing. Powell echoed some of the themes in a more nuanced speech on Friday, explicitly rejected the idea about changing 2%. That's not a big deal. We don't know what the neutral rate is. That's not a big deal. Powell's speech illustrated how he's trying to thread the needle between slowing hiring, investment, and spending to bring inflation down without providing so much restraint that it would needlessly, severely damage the economy. Yep. Good call, whoever said that in the video or in the chat here, so I appreciate you. Okay, awesome. Again, cautious optimism. That's what I call it. All right, folks, appreciate you being here. Thank you so much. This is the first time I've done a Fed meeting on TikTok, Twitter video, Twitter Spaces, Twitch, and YouTube. All right, folks, we'll see you. Goodbye.